Hi guys, my name is Habib. Welcome to my YouTube channel. So this is another episode of the weekly review that I drop every week. So if you're new here, kindly subscribe to the channel and like this video if you find it very helpful at the end of the video. So firstly, I apologize. I was unable to drop last week weekly review because of some unforeseen circumstances. So I you know I didn't take a single trade this week, but just for you to realize that the market is dynamic, it's dynamic in nature. So the fact that I didn't take any trade doesn't mean there were no opportunities present. Some people might have, taken opportunities in the market. So I'm just gonna go over previous week trade that I took. I took like two or three trades, but I didn't, was unable to do the weekly review. So I'm gonna start from there and also go down to this week's opportunities that were present, and as much as I didn't take any of the opportunities. So welcome again, and please like and make sure you stay till the end of this video. I promise you gain one or two things. So let's get on the chart now so I can show you what we're talking about. So previous week started on the 4th of March. If you go over my last my previous recordings, which was my previous weekly reviews, you'd see I made mention of this zone. I made mention of the possibility of this zone playing out. I made mention of the possibility of price respecting this zone and either reacting back to the upside. Price was around I think this side. Price was making some attempt to go downward then, I think. So you can you're free to go over to my previous videos and check what I'm talking about. So now this was a marked zone, it was a marked zone, and it's obviously a valid demand zone. And then I could see the possibility of price, sorry, I could see the possibility of price coming back down. So let's go to the lower time frame. These vertical lines start represents the start of the 4th of March, which was the Monday of the previous week. So all I was looking for was to sell, to be honest, because checking the higher time frame. Let's go back to the higher time frame. You'd see that the market has been making series of higher highs and higher lows. So we've been on a very strong uptrend. So for an uptrend to continue, it needs, as we all know, we've got push phase and exhaustion phase. No matter how a price pushes, it's going to exhaust. It's just like the market breathing. The market has a breathing phase. It's going to breathe. When it pushes up, it's going to breathe. When it pushes down, it's going to breathe equally. So we can also, it's also regarded as the corrective wave and the motive wave. But to make things a bit easier, you can regard it as the push and the exhaustion phase. Everything is just English and terminology. What matters most is you understanding how it plays out on the chart and how to capitalize on it by trading and making money. So on the 4th of March, all I was looking for was to sell. Remember, simplicity is the ultimate sophistication. So I've determined my direction, which is we were on an uptrend, but I'm looking to sell to follow the trades in its corrective wave. So this is clearly on Monday on the 4th, nothing happened. So let me shift the vertical zone. So this was the start of the previous week on Monday. So nothing happened. And then on Tuesday, apologies, I would have to go back to the chart. No, I have to go back to my group and see. Okay. This was on the 4th, GBPUSD. Mm, was it? Coming. Mm, just a minute. Four. Oh, my bad. Can you imagine? I've been analyzing GBPJPY. Okay, no problem. Let me just continue. So there was nothing on GBPJPY on the 4th, and then on the 5th, what happened? Okay. Mm, on the 5th, this is actually, I didn't take this trade, but it's an opportunity to capitalize on. Remember, we are looking to trade downward. So this is a being a break of structure, created an inducement. And also, the most important thing that happened around this zone is this is apart from the inducement, the most important thing that happened. If you check well, there is nothing the price wants to come and do here except it won't, except it didn't have the intention of coming downward. There's nothing here, If it didn't have the intention of coming downward, it's going to continue upward. But we capitalizing on the fact that the price is correcting, the instrument is correcting. He has pushed and now it's correcting. We can regard this as uh a discouragement because there's nothing price wants to come and do here. So now looking onto the next possible scenario, this is an Asian eye. So apart from the inducement, price did something again. It swept the Asian eye, and if you go to the lower time frame, this is an this is a very good entry opportunity. You can just use a 15 pip stop loss and then bag your 1 to 2 ratio, 1 to 2 ratio. That's on Tuesday. And then on Wednesday, which was what was on the 6th, I sent the setup on the group. Yeah, this was on the 6th, GBPJPY. This is when I executed, and this was my position on the MT5. So quick one, I basically pretty much use MT5 now. So same thing happened here. Asian eye was swept, and then there is an inducement here that was swept as well, liquidity and inducement. So remember, we are on a bearish order flow. All this is forming is just bearish order flow. I'm going to be putting a video up next about trend versus order flow. Please make sure you watch the video. You get a bit more insight about the differences of trends and order flow. So this is bearish order flow. So everything forming here is just a bearish order flow. This is inducement sweep. Asian eye was swept here as well. And another thing you need to put into consideration is that when Asian eye was swept, some people might have just entered, and so far you increase your stop loss and you let it breathe, there's nothing to worry about. The trade will still play out in your favor. But if you want to be a bit more technical and sure about the scenario playing out before executing, you can just wait for the last eye here. Look at the last swing eye. So lower eye, lower low, lower eye, lower low, lower eye, lower low. So this is the last lower eye, it's the last swing eye, and what happened? Look at it was swept. The liquidity there was taken out. You go to the lower time frame. This is something you can just capitalize on. 50 pips. I took this trade. I'm going to show you when I posted it on the group now. So this was when I took the trade. I held it. I actually held it very longer than I could imagine. So this was the 1 hour time frame. Yeah, the 1 hour time frame. So simple stuff. Simple stuff. I held it up to the next demand zone that I mentioned at the very first beginning. Great profit, yeah. So I held it, and I also predicted a reaction on the demand zone. I've talked about that, for a while. So I sent it on the group on the 7th of March, which was the next day I took this trade, and it pretty much happened. We got a reaction. Let me delete this thing. We got a reaction. We got a reaction. We got a reaction, and I just entered after a sweep of this. I entered after the sweep, sorry. This actually, there are many factors that you could consider when you're actually trying to enter a trade. I don't think I'll be able to go into too much details, and hope you guys understand. But I would just, point out the fact that a sweep and a very strong weak rejection, so far it's happening in a key level, is enough for you to successfully enter a trade, and it's going to play out. Let me repeat that. A sweep of liquidity and a very strong weak rejection, so far is playing out on a very strong and, on a valid key level. There is a higher probability that you will successfully the trade will successfully play out in your favor. So played out, and I think I held it. I closed partials around 1:2 or something. Yeah, because it was very late. I entered around the end of New York session. I basically must trade London session. But randomly, and sometimes when I spot an opportunity or a trade setup I've been anticipating for so long happen to play out around New York session, I'm going to execute. So I close partials around 1:2. This was when I executed this, played out. This was the trade. Can you see? So that's basically all I took the previous week. And then that happened on Thursday, and then on Friday, nothing. And then on Monday, which was on the 11th of March, to be honest, it's been just a very slow week. Market has been slow. If you check the 1 hour time frame now, we've been having a ranging market. I never said there were no opportunities, but to save us time and stress, I wouldn't want to go into analyzing this range, because I feel, you know, the market is still trying to decide where to go. The bulls and the bears are in a tug of war. So today is Saturday. On Monday, we'll know what happens. Maybe we're gonna continue upward, or the demand is going to bring it downward. We'll see. So for the GBPUSD, looking at the 1 hour time frame, we are also having, higher highs and higher lows. We've been on an uptrend, so everything I was looking for was to buy. Everything I was looking to do was to buy. Going to the 15 minutes time frame. I was just looking for what when I spotted this, I was waiting for one thing to happen. I was waiting for one thing to happen. This was on the 5th of March. I posted it on the group. No, I didn't. Yeah, I was waiting for one thing to happen. I was waiting for these equal lows to be swept before executing. However, that didn't happen, and price still went ahead to push the upside. So that's another thing I would like to point out. In trading, it's okay for you to miss trades. You don't have to FOMO, fear of missing out. You don't have to FOMO. There is always enough opportunities and enough time to to to, to execute as much as you want in the market. So there is no more point in FOMO. So my bias played out, but I never got to enter. And then on Wednesday, nothing really important. Thursday, the market was still trending, but it didn't give us an opportunity. And then on Friday, there was an opportunity here. The fact that we've been on an uptrend doesn't mean you need too much extra confidence before entering the trade. You can basically enter a trade after a sweep of Asian high or Asian low. Yeah, can enter a trade after a sweep of Asian high and Asian low. Besides, this is not just Asian low, it's Asian low plus equal low. And as we understood the concept of liquidity, every equal low will be swept and price will most likely continue in the opposite direction. After a sweep here, price played out and boom. Can you see? And then on Monday 11, price was trending down, no opportunity to enter. On the 12th, price was trending down, no opportunity to enter. I was basically watching the movement. And then on the 13th of March, which was on Wednesday, yeah, an opportunity was presented as well, but I didn't take it, because I wasn't really feeling the whole movement. And after confirming the DXY price action, nothing convincing for me. So I was basically sitting on my hands most throughout last week and this week after the 2 trades I took. And then on Thursday, the market eventually sold and took out most liquidity. And then on Friday, there was a sell opportunity on Friday. This is an equal high. I marked it, but I didn't take it. So I want you to know that you can, even when the market is slow, there might be numerous of opportunities, but it's okay for you to decide that you don't want to trade, because instinct also plays a huge role in trading. So it's okay for you to decide that you don't want to trade, and you're basically, you just want to watch what the market has got to do, in the process you are learning and also protecting your capital. So that's basically all that happened last week, stroke this week. So Monday is another great day, another great opportunity for us to see what the market has got in store for us. So let's hope, and see you guys on the next episode of the weekly review. So if you happen to stay till the end of this video, please like, subscribe, comment below. So stay blessed. Bye.